Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, May 24th, 2018, and this is the Daily Report for Gold and Silver. Nice upside move in the precious metals complex with gold closing about $12 higher today at $13.05, a 23-cent gain in silver, taking it to $16.70, and that all within a tailwind of a weaker U.S. dollar, giving up about 19 points at 93.72. Dow Jones Industrial Average loses a little bit of ground, 75 points to be exact, closing at 24.18, and very nominal moves in Bitcoin futures, 75.80, 75.75, and that is in the CME and CBOE futures exchanges. An interesting event has occurred since the time we put our long trade on yesterday and today's market action. Gold closed substantially higher, up about $14, currently tracking at $1,304.70. The event that I'm speaking about is a letter written by President Trump to the leader of North Korea, canceling the proposed summit on June 12th in Singapore. That, of course, heightened geopolitical concerns, and safe haven assets such as gold moved in a favorable and positive direction. When we look at the market in terms of a technical basis, we can see that the highs achieved today come in roughly at our new level of resistance, which I believe resides at 1306. It happens to be a 38% retracement. So we do have a Fibonacci retracement suggesting this price point, but we also have price action that correlates or substantiates that assumption. And I draw your attention to the series of lows that I've just highlighted in green, in which when the market was trading in a range between 1300 on the bottom and call it 1360 on the top, and oscillated back and forth between these price points, that was a level in which, for the most part, gold pricing found some solid footing and support within a couple of dollars. So the fact of the matter is that support and resistance are part and parcel of the same thing. It's simply a matter that the current level at 1306 is a ceiling that we are looking up at, whereas prior to that, that price point was a floor or a level of support. The fact that it traded to that point and found some resistance does not surprise me. The question is whether or not events that have recently transpired will increase the momentum, or I should say continue the momentum, so that we get a sizable move above that. And if that's the case, we can begin to target our next levels of resistance. And I think one of the best ways to do that, besides Fibonacci retracement theory, is to use our longer term 200 and 50-day moving averages. As you can see, I have just added the moving averages to our daily candlestick chart. In red, we have the longer term 200-day moving average, and in green, we have our shorter term moving average. That is our 50-day. Of course, in a bullish scenario, you want the longer length moving average to be below the shorter length. And oddly enough, as we look at the price point currently, we can see that the current level of resistance at 1306 is roughly $2 below the 200-day moving average, which currently resides at 1308. So that is certainly the first level that we want to see taken out. And as I said, we also have evidence of this being a level of resistance currently, former support, based on these lows that came in throughout the entire year. The next level, assuming that this market breaks higher and trades above current pricing, would be an area that would be comprised of the shorter term 50-day moving average, which is at 1323, and the 23% retracement, which resides at 1331. Let's see how the market reacts at current pricing. My sense is, although we do have multiple instances where this market was support, I believe that in terms of a resistance level, should the fundamentals that drove the market higher here continue, we should have absolutely no problems moving above that price point. We would then have our secondary target come in between 1323 and 1331. Currently, we have an extremely tight stop in terms of our risk parameters in the market. Realize we got in at 89, 1289 or 1290. We put our stop at 1284. This is 86 right here. So our attempt was to just put it a couple of dollars below the low that occurred previous to the big spike up. For right now, I want to leave it there and see what new lows are made. Of course, we did get a higher low as well as a higher high in trading. If that continues, we'll look at that to guide our stop placement. And over the next couple of days, we will refine our exit strategy as well as our target price. For now, my recommendation is to maintain our current long position and to maintain our current stop. And traders, silver also experienced a nice solid upside spike today, closing at 1669. Considering that it closed yesterday at 47, we had over a 20-cent increase in terms of pricing. We definitively witnessed silver break above the shorter-term 50-day moving average, which is still inverted below the 200-day, which is indicative of a bearish sentiment. And most importantly, we can see that silver is still trading in this very narrow and defined trading range that has been so prevalent throughout February, and except for really one instance that occurred mid-April right here, silver has not been able to break above or below that price point. As long as silver remains below the longer-term 200-day moving average, I cannot be extremely bullish in the market. While I acknowledge that we had a nice upside spike in silver, I am not convinced that it has the energy or the momentum to break above this level of resistance that exists right around the 200-day moving average. Lastly, I do want to take a look at Bitcoin futures. Interesting action in Bitcoin in that it did trade to a lower low today, trading as low as about 7,200. It traded to a lower high today, just above 75.80, and then closed right in the middle at 75.80. Now, the key as far as I'm concerned is the fact that the numbers we were looking at yesterday as a potential continued drop in the cryptocurrency came in at 7,200. Of course, that is a Fibonacci-based number. That is the 78% retracement. And the data set that we are using for this retracement is the entire trading range since Bitcoin futures opened back in December and traded to a high of 20,000 and then traded to the lows in February at around 6,000. We have a secondary retracement going from 6,000 up to these tops at 11,000. And it is the shorter of the two retracements that we are going to focus upon right now, because we passed the 23, which is the big data set, and on the shorter data set, in other words, this rally simply from 6 to 11 takes us to a 78% retracement at 72.42, which does match up with the lows achieved today. Therefore, there is a potential on a technical basis for the cryptocurrency to find some support here. If it does, the next level of resistance is going to be 81.71 followed by 86.40. If it breaks below this in trading, traders, I believe it's going to challenge the recent lows at $6,000. Traders, as you know, I am a hybrid technician which uses fundamental data but really relies heavily on technical indicators. We entered our trade yesterday based upon technical indicators and based upon signs that we were seeing the first potential bounce in the market to the upside after a sustained market move over 5 days in which it traded at the same price point. Turned out to be a letter by President Trump canceling the North Korean United States summit that really set these wheels in motion and in fact could take gold and silver prices substantially higher. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.